The thing that I look at when I'm looking to place a trade is the overall trend of the market. We all know that it's better for you to follow an uptrend which is already going than to try and reverse a long-term trend, right? So in this example, I'm going to show you with this 1 hour time frame. This is volatility 10 index, and the first thing that I'm gonna be looking at is the overall trend of the market. So to look at the overall trend and to be able to read the overall trend, the easiest method that you can use is to use the moving average. So for example, I have the 50 period moving average here. This is the 50 EMA. So once I have this 50 EMA, I know that if the market is below the 50 EMA, we are in a long-term downtrend. On the other side, if the market is in a long-term uptrend, it should be above the 50 period moving average. But I cannot just place trades just because of the 50 period moving average. I want to be looking at levels of structure, right? So because the advantage of placing your trades at level of structure is, let's say you see a market which looks like this. If you manage to sell at this point right here, you are going to be putting your stop loss above the level of structure, and you're going to be getting a good risk to reward ratio rather than placing a trade at anywhere without a level of structure, because there you won't have where to put your stop loss, right? So in this example here, I'm gonna show you this simple strategy that I'm going to show you here. This strategy works well with the 1 hour time frame, and also we can switch over to the lower time frame, right? So for example, in this case right here, you can see that the market was moving in a long-term downtrend here, and then it reversed here to create a swing, a major swing level right here. So I always say that if the market moves, let's say like this, and then pulls back here, the most best level of placing a trade is this previous level of structure. Why? Because when you see a break down here, we know that if the market comes into this zone here was support, now it's likely to turn into resistance, right? So first of all, we see the market is below the moving average, and then we see a swing level here, and then we mark this major swing level here. Now the next thing that we are looking at is for the market to come back into this swing level, right? So here, when the market comes back into this swing level, creating this pullback here, this is the good time to place a sell order. Why? Because we know that the market is below the 50 EMA, we are in a long-term downtrend, and now the market is coming back into a previous level of structure, which is likely to turn into resistance. So the strategy works as this. So once the market comes into that zone here, you'll be looking to sell your orders at this point right here. But you don't just sell because the market is at this zone. The next thing that you are going to be looking at is looking for things like reversal candlestick patterns or chart patterns, right? And if you want to learn more on how to identify candlestick patterns, chart patterns, and how to read these trends, these long-term trends and long-term downtrends, you need to join the Forex Mastery 1.0 course. I will leave the link in the description. This course is going to give you a step-by-step guide on how to read price action from start to beginning. Also, you're going to learn how to manage your risk and how to manage your emotions, so that when you enter into the trade, you don't pull out of the trade too early, or you don't let your losses run up to a level where you damage your account. Now back to this strategy, you can see that this market comes back into this zone here. Now I'm looking for any candlestick pattern which shows me that there might be a reversal. So as you can see at this point right here, we get an inverted hammer. This candlestick is called an inverted hammer. We talked about in the Forex Mastery course. Once you see this candlestick which is called the hammer, the next thing that you want to do is you want to be placing your sell orders. So you might sell at the close of this hammer, but if you are not sure, if you are not confident enough, you can wait again for another red candle which comes after the reversal candlestick pattern. You want to wait for another confirmation candle, which is this candle right here. So you would sell at this point here. You put your stop loss above the level of structure. Why? Because you know that if the market comes back here, this level of structure is likely to help you to hold down the market so that it can go down. So once you do that, you can see the next thing that happens is the market moves and then it goes to the lower side. So this was a winning trade because you would sell at this point, put your stop loss here, and then you take profits 2 times 1 the risk to reward ratio. So if you are risking $1 per trade, you are looking to make $2. So it's called 1 to 2 risk to reward ratio. So that's how you place a good trade on this one, right? So the next zone which the market moves to from this point, I would say, is this point, because it's clearly past this zone here, and then we see a pullback. Now we are not trading yet, we want to see another impulsive move here, and then once we see that, we mark out this zone right there. So let me show you what I mean. So if we mark out this zone here, we are going to be looking for the market now to, since it reverses here, to break past here and then retest into this zone. Once the market retests in this zone, what do you see at this point right here? There is a hammer candle which shows right on this level right there. So if I zoom this in, you can see there is a hammer candle right there. After the hammer candle, you can see the next thing we see is the market creating another red candle here for confirmation. So if you were not confident enough to enter with the hammer, the next candle you can use is this red candle here. So once you see that happening, then you can see that the next thing that happens is the market moved in a consolidation for a very long period of time, but selling at this point, putting your stop loss right at this point right there. So you can see the market move in a consolidation for a very long period of time, and you need to be patient. That's why I always say you don't need to exit your market until it reaches either you take profit or your stop loss, because you can see here the market moves here, but this is the reality of trading. The market is going to harass you emotionally, and then later on the market went on to hit your take profit. On the other side, for you to place buy orders, what do you need to see? First of all, you need your conditions to be met. Your condition is the market needs to be above the 50 period moving average, so that you confirm your long-term uptrend, right? So once you confirm your long-term uptrend, the next thing that you are going to be looking at, once the market moves above the 50 period moving average, it makes a pullback and another impulsive move. Now you are marking out this zone here, because this is happening above the 50 period moving average. So you can see the market here reversed here, and then the next thing is the market breaks past. Now the market is pulling back into that zone and right on the 50 period moving average right there. So what are you looking for? Is you are looking for any type of reversal candle. So here you can see we have a small candle here, and then we have a huge momentum green candle showing you that the market is likely to go up from this point here. So here you are going to buy at this zone, and then you put your stop loss right there, and then the next thing that happens is you can see the market moves up to this zone here. So on 2 to 1 you might have lost this trade here, but you can see the market moves up again, maybe on 1 to 1 risk to reward ratio, or on 1 to 1.5 risk to reward ratio, you should have made profit right here, but I don't think this is 2 to 1. Let's see. Okay, so this was going to be a 1 to 1.5 risk to reward ratio. So you need to choose which best risk to reward ratio you want, but for me I would like to stick with the 2 to 1 risk to reward ratio, because I know that some of the trades will just come up as winners, right? So here's another example. You can see that here the market is above the 50 period moving average, so you have been looking for buying opportunities, right? Once you are looking for buying opportunities, the next thing that you see is the market makes a strong move up, makes a pullback, and then makes another strong move up, and then we are looking at this zone here as our level of structure, right? And once we mark out this zone right there as our level of structure, the next thing that happens right there is the market moves back into this zone at this point. So you can see and then the impulsive move that breaks past this zone, and then the market comes back into this zone here. Once you see the market into this zone here, you can see it created the tweezer candlestick pattern here. So if you don't know how to trade candlestick pattern, make sure you join up the Forex Mastery. I'll put the link in the description. So you can see there is a tweezer candlestick pattern here, and then this is where you would buy, let's say at this point right there, and then you put your stop loss below this zone, and then you take profit 2-to-1 risk to reward ratio. And this was a quick winner. Why? Because we are already in a strong uptrend. So we are already in a strong uptrend, and chances of the market keeping in the same direction is very high. So here's another example. Again, you can see we are in a strong uptrend because we are above the 50 period moving average, and then we can see an impulsive move, a pullback, and again we see another impulsive move. What does this impulsive move does? It breaks past this recent lower, this recent higher high at this point right there, and then we can see a pullback coming back into this zone right there. And on this zone, what do you see at this point here? You can see there is a bullish engulfing candle, and once you see a bullish engulfing candle, that should be your confirmation. You place your buy order at this point, you put your stop loss below this zone that you have just drawn at this point right there, right? And then you put your take profit 2-to-1 risk to reward ratio. And again, this was a quick winner because we are already in a downtrend, in an uptrend, right? And then we can see again here the market makes another impulsive move, pulls back, another impulsive move, and this impulsive move breaks past this zone here, and we are already in a strong uptrend. Why? Because we are above the 50 period moving average, and now we are looking at this zone here as the zone where you will be looking to place your trades. And then once you see the market moving back into this zone right there, right, once the market moves back into this zone right there, you can see you are going to place your buy orders here, your stop loss there, and then you take profits 2-to-1 risk to reward ratio. Again, this was a quick winner. Why? Because we already have the market in an uptrend already. This strategy works very well on 1 hour time frame, 15-minute time frame, up to the 4-hour time frame. I haven't tested on the 1 minute time frame or 5-minute time frame, but the reason why I like the 15-minute time frame is because it's very clear, and you get some time to look into the market and see your candlestick forming, see your trends forming, and we have time to look into the market.